Hey everyone, welcome back to Corporate Decoder, the place where we break down these hefty corporate filings into easily digestible insights. Today we have a report that's got some major financial shuffles and regulatory approvals going on. Get ready to unpack some big news for Pinnacle Financial Partners and Synovus Financial Corp. And hey, if you like getting these insights straight from the source, make sure you hit that subscribe button. We also have a fantastic Discord community linked in the description below where we discuss these filings further, so join us there. So what's the big story here? It looks like Pinnacle Financial Partners and Synovus Financial Corp are not just friends anymore, they are planning to merge. And this report is all about giving us the latest updates on that very significant deal. It is not just about combining two companies, it's about how these two banks will become one larger entity. This is essentially a current report, meaning something important has happened that needs to be shared right away with investors and the public. The date of this happening was the 25th of November 2025, looking back just one day from the report date. Looking at the securities registered here, we see standard stuff for a financial institution. Common stock, which is basically ownership in the company. And then there are these depository shares. These represent a portion of preferred stock, a kind of stock that has its own special rules. Both of these are traded on the Nasdaq Stock Market LLC, which is a major stock exchange. This section is all about the big merger they announced earlier back in July of 2025. The plan is for Pinnacle and Synovus to merge into a new company called NewCo, and then that new company will take the name Pinnacle Financial Partners Incorporated. It is a bit of a mouthful, but essentially one company will absorb the other and keep the new combined identity. This part gets a little technical, but here is the plain English. Pinnacle Bank and Synovus Bank are going to merge too. So it is not just the parent companies merging, but their actual banks will combine operations. This process also involves getting approval to be part of the Federal Reserve System, which is a significant regulatory step, meaning they will be under stricter oversight, but also have access to certain banking facilities. This is where we find out what new information is being shared. They released a joint investor presentation. Think of this as an official slideshow meant to explain the deal's benefits and details to investors. They are essentially saying, here are some more slides and details about this big merger that you should look at. This is where the really exciting news lands. On the 25th of November 2025 and the 26th of November 2025, they got the green light. That means regulatory approvals from key bodies like the Board of Governors of the Federal Reserve System, the Tennessee Department of Financial Institutions, and the Georgia Department of Banking and Finance all came through. This is huge because it means the deal is much closer to actually happening. So when will this all be finalized? They are expecting to officially close the deal on the 1st of January of the next year. That's a clear target date for the merger to be fully complete and for the combined company to officially start operating as one. This exhibit is the joint investor presentation we just talked about. It is a key piece of information that gives a look into how the companies are presenting the benefits and outlook of their merger to investors. And this exhibit is the joint press release. A press release is how companies officially announce news. So this document likely contains the formal announcement of the regulatory approvals and the expected closing date. Forward-looking statements. Now let's talk about what's known as forward-looking statements. This is a legal disclaimer that basically says, we are making predictions about the future here and things might not turn out exactly as we say. They are warning investors that there are risks and uncertainties involved in this merger. Common risks include whether they can actually achieve the cost savings they expect if integrating the two companies will be smooth or difficult, and if customers and partners will accept the new combined entity. They are essentially saying, we hope this merger works out great, but there are a lot of things that could go wrong. And finally, we have the signature section. This is where an authorized person from the company confirms that the information in this report is accurate to the best of their knowledge. Here it's signed by Harold R. Carpenter, the Executive Vice President and Chief Financial Officer, confirming the details presented. Now let's look at what this all means. This report tells a story of a major consolidation in the financial sector. Pinnacle Financial Partners and Synovus Financial Corp are not just getting bigger, they are fundamentally changing their structure and operations. The fact that they have secured all the necessary regulatory approvals is a massive step and signals that the authorities believe this merger is in the public interest. This is not a small deal, it is a transformation for both companies. The expected closing date of the 1st of January 2026 provides a clear timeline for investors and employees to prepare for. The joint investor presentation and press release are important because they are the official communication from the companies about the strategic rationale behind this merger. We will want to see what they are highlighting as the key benefits, such as expanded market reach, enhanced product offerings, or greater operational efficiency. These presentations are designed to build confidence among investors that the combined company will be stronger and more profitable than the individual entities. The risks highlighted are also crucial. Mergers of this scale are complex and fraught with potential challenges. Integration of systems, cultures, and customer bases can be incredibly difficult. The companies are acknowledging these potential pitfalls up front, which is good corporate governance, but investors will be watching closely to see how effectively management navigates these challenges. Overall, this filing signals a positive momentum for the merger. Securing regulatory approval is often the most significant hurdle. Now it is down to execution. The companies are moving forward with a clear strategy and a defined timeline, which is always a good sign. The focus will now shift to the successful integration of the operations and realizing the projected benefits of the merger. We will be keeping a close eye on this situation to see how this newly formed entity performs in the coming quarters and years. Alright, that's our breakdown of this significant corporate update. What's your take on this merger and what they might mean for the banking landscape? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.